Today on the Brew, we start Tesla week. Tesla just announced some disturbing earnings that's taken stock down a little bit. We're going to take a peek at it today. Are we bullish? Are we bearish? And it continues into the week. So let's have a look at this when we get to the opening bell. Wow. We have like little music that
Welcome to the Brew.
Let's just.
This is done.
This is so cool.
All right. So here we go. Question for you.
How does that go away? Oh, it went away. Yeah.
Question for you. So we've
hi, Mal.
Hi, Lex.
All right. All right. Go ahead.
Q1 2024 Tesla plummeted.
Yes.
So it's on sale. It's on discount.
Yeah, it could be or not.
Right.
I tend to think it is because of some of the reasons we're going to talk about with Paulina on Friday.
Yeah, we're going to go.
We're going to hold that until then, but let's just pretend that we have a directional bias in Tesla. Okay, safe? Is that cool to pretend?
Yes, I'm going bullish. I'm still bullish.
So between you and me, or with us, we are both bullish on Tesla. I will say that I'm bullish. I think you're bullish. One of the things I don't know is how bullish I am or how long-term bullish I am. So we're going to pick a medium-term spread and we're going to go over it. How's that sound?
That sounds great.
Okay.
So if one is bullish and you want to turn this news into actionable news, what does one do?
Okay. Let's go through a trade plan. Okay. I'll show you how I like to think about these things. You ready?
Yes, let's go.
Well, we have to look at the TradeHawk screen, don't we?
All right.
Here we go.
I need my 4 eyes.
All right. So I'm going to go maxi size here on my screen. All right. So we're looking at an option chain in the middle here. And I have a spread on. I'll talk about the spread in a second. So give me a second here. First thing I like to do in anything that I'm going to make a trade in with options is there's a little checklist of things. I'm not going to go in any particular order. I'll just go through them. Number one, we have to decide what our time frame is. Okay. How far out into the future are we going to do this trade? Are we investors? Are we day traders? Are we swing traders? Are we something else in between? Okay. So first of all, an investor to me means you're going to hold this for the long run. That could be years. Okay. Going back the other side, day trader. That is someone who's going to be in and out in one single day. You're going to put it on at the beginning of the day. You're going to take it off by the end of the day. You're going home with no inventory, no position. The swing trader, a little bit longer time frame. It can be a couple days up to probably a week or so thereabouts. So that's an interesting play too. And you know, the one that I kind of like, I'm going to call it, I don't know if there's a name for it. What's the one beyond a swing trader but less than an investor? We'll call it a position trader. How's that sound?
I like it.
So the position trader, you know, I'm going to say up to 120 days thereabouts. Safe? Yeah.
Yeah, I think it's going to take a bit to rebound. I mean, there's like we're going to go through all the fundamentals on Friday, so stay tuned.
Right.
But I think, you know, you've got the arson that happened in Germany. You've had, you know, he missed delivery dates and, you know, production's high. And we have the Red Sea crisis that, you know, there was some supply distribution issues going on there. So there's a lot of stuff going on.
There's headwinds. There are definitely headwinds for Elon in the Tesla and for the EV market in general, right? And we'll go over a lot of those on Friday with Paulina. But you're right. You know, we're having an EV plummet in demand for these vehicles. Go ahead.
But I just to reiterate, why are we bullish? Is that this is the fundamentals are there, and this is less a car company and it's more a tech company, and so their AI is strong. Their infrastructure and energy is in the licensing potentials for the revenue streams is incredible. So let's take a look. Okay. If you're bullish, what would we do?
Yeah. So here's what we're going to do today. Okay. And I'm not pretending that I have the sole answer to what bullish is. If you're really bullish and you're right, you either sell puts or you buy calls, right? That goes without saying. But this is a play that, you know, you have a bullish sentiment. You're not sure of the time frame. It's not forever. It's not tomorrow. You want to put something in your favor to take advantage of a risk-defined spread with limited reward potential. So it's a limited risk, limited reward. Those are what the kind of trades I like. I have always said I'm a bunter. I like to get on base a lot. I like to have a high batting average, a high on base percentage. I like to never strike out and just keep hitting little singles so they add up into a nice big, supply of cash. That's kind of how I like to do it, right? I'm not hitting home runs. I'm not swinging for the fence. So first thing I like to do, time frame. I chose 102 days, which is July 19th. Okay, that's the July expiration. It's near someone's birthday that
right.
my on-screen wife has a birthday. So July 19th, right? Do you want to tell us your birthday or not? Maybe we shouldn't.
Stay tuned for a later episode.
Yeah, why not? Okay, so I picked that July 19th, 102 days. I said I'm bullish from here. Next thing I do, okay, I want to know what the expected move for July 19th is. The easy thumbnail way to do that. See this orange line on the screen. Okay, this horizontal line. It's on the at the money strike. That at the money strike happens to be 175. What I like to do is I like to take the midpoint of the call of that strike and the midpoint of the put and add them together. Okay. And when I did this, the midpoint for the call was 18.5 and the midpoint for the put was 18, but it's a little different on the screen now, but let's just pretend that those were the numbers. So 18.5 plus 18, 36.5. Yeah. With me so far?
Totally with you.
Okay. Now, what that implied volatility, that's a straddle. So we're taking that straddle. It doesn't matter buying or selling. You just need the number. So 36.5. The implied volatility of that, it's not telling us what direction the stock is going to go. It's going to tell us how much, what magnitude. It can go down or up by that much by July expiration. That's what the market makers are predicting based on the values that they've pumped into their model to produce those numbers. Okay, so that's the expected move, roughly. I mean, it's not exactly mathematically correct, but it's close enough. And I always like to use the analogy, doing this sort of stuff in options is like dropping grenades. Just get close. It doesn't have to be perfect brain science. Just get close. That's all you need to do because you're going to
diminishing returns on perfection.
That's right. Exactly right. So I got $36. If I go up $36 from 175, I get to 111.50. Guarantee you there's no, I'm sorry, 211.50. There's no 211.50 strike. So we're going to have to fudge a little bit already. Next one, down $36.50. I get to 138.50 on the downside. I've already said I'm bullish, so I don't care about the downside. I just wanted to show you where that is. So what I like to do when I figure this number out is I like to place my short option around that expected move strike, right? To the upside, 211.50. I placed it at the 210. If you can see this, you can see this red number 2 here.
Yeah.
That's my short. Now, what I chose to do, take that back. Let's take a step back. Now that I figured that out, I got to figure out what kind of trade I'm going to do, right? How do I do that? I need to find out if implied volatility is high or low. I like to buy cheap things. I like to sell expensive things, not the other way around. So within TradeHawk, you can go to your trusty musty chart. And you can see this is 365 days of Tesla. You can see my little resistance line up here, my little support line below. We're at support down here, okay? This is quite a range. We're at the bottom end of it. So, the bullishness might be pretty good. If it breaks through here and solidly, we might have to, start bailing water or something and get the hell out of Dodge. That's why I'm going to do the spread I'm going to show you in a second, okay? So let's look at implied volatility. I'm going to turn that on. We're not going to show you we're not going to do a cycle here. So let's see. Okay. Do you see the blue line? That is the implied volatility of a 90-day option. Okay. And if I put my cursor on it at the end of the time frame here, you can see it's about 49 vol, 50 vol, let's call it thereabouts. So if you look at this line, that's about the midpoint-ish. So we have a 90-day implied volatility kind of in the middle range. It's not too high, it's not too low, just like the porridge, not too warm, not too hot, not too cold, right in the middle, perfect temperature. The close to close volatility of the underlying is a little bit lower at 47. They're very close to one another. So, that's not telling me much of anything. There's no discrepancy here. So not being too cheap, not being too expensive. I got to look for a spread that I can either purchase for a low dollar amount, okay, or I'm not going to really. Oh my god, I got the thumbs up thing. Oh my god, I love
I
that little
don't
thing.
get those.
Because I always do ones with my thumb. I should start doing ones like this and twos. I always do one with my thumb. So I'm gonna, you can have an argument to either sell or buy here in this one because it's right in the middle. But I chose to do a buy trade. Now, here's why I chose to do this, and I'm going to take this back off again. This little guy here. Remember, I went to my short strike is going to be my standard deviation at 36.5. That's where I'm gonna put my short. I chose to do a broken wing butterfly. Okay, what is that? So broken wing butterfly, when I'm purchasing it is, I'm buying, the ratio is 1 to 2 to 1, but the strikes aren't uniformly apart. So I'm giving myself a bullish sort of sentiment on my broken wing butterfly. So I'm making the lower call spread, this 200 to 10 call spread, that's $10 apart. I'm making that my long, and my 210 to 15 short call spread that I threw on top of that to make this butterfly, right, is only $5 wide. So I got a $10 wide long call spread, a $5 wide short call spread to make this broken wing butterfly. Okay. What's the beauty of that? Let's see. Let's go to what if for a second. This is that risk graph of that. So look what happens here. Here's my max profit. Go ahead.
Sorry to interrupt. Just for everyone, talk about the range that you want to stay in just so you can get that cash flow. So explain a butterfly just quickly.
Yeah,
and
sure.
Then after you just explain that broken butterfly.
And that's super helpful around break evens, right? So let's just take a look at the break even here so I can get that up. Do we see that? Yeah, we do.
Yeah.
So you can see that my break even is 201.40 on this trade. Okay, so what that basically means is that from what I paid for this thing, we haven't gotten there yet. I know I'm paying $1.40 for this. So I got to own this for $1.40. That's the most I can lose on this trade is $1.40. My max profit is $10 less what I pay for it, or this $1.40. So I can make $8.60 or lose $1.40. Okay, remember I'm bullish here. I have a reason for doing this. So that's number one. So my break even's at 201.40. It's 140 above that 200 strike, my lower strike. I've got to get that 140 I paid for it. Once I get to 140, I'm making money. Now, the beauty of the broken wing butterfly is I don't have an upside break even because remember, I'm long a $10 spread and I'm short a $5 spread. So if it goes to infinity to the upside, the difference between 10 and 5 is $5 I make less what I paid for it, the $1.40 again. So I can make that big number all the way up, which is awesome. So that's a great trade I can make all the way up. 360 is my max, or my worst profit, I should say, on a massive up move. If I'm wrong about getting to 210 and it goes to 310, I'm gonna make that 360. Love it, right? So I got
that's nice.
lot of cool things happening. Now, where I wanted to where I wanted to go by then is 210, which is the middle, my short strike. So that's worthless at 210. I make the full $10 on my 200 210 spread. My 215 210 spread goes out worthless. So I make the $10 less the $1.40 I paid for it. That's at 860, which is also right here for max profit. So I can make 860 max. I can lose 140 max. That's the most I can lose. Or the upside, massive upside play, I can still make $360. So a lot of good things can happen here.
Yeah.
Right? Does that make all that make sense, Ma?
Absolutely. I think it gives a really nice foundation. So, and this was a great play for what Tesla's going through right now, I think.
Yeah, I think it's pretty good. And I'm only paying $1.40 for this. That's what the midpoint is roughly. I made it, an even number. It's $1.42, but I made it $1.40.
And going out to July 19th gives it some time to rebound, which is nice.
100%. Gives you time to rebound. Now, this spread won't be wonderful. If it went to 210 tomorrow, we'd make money. Guaranteed. Yeah. Okay, we're going to make money. We're not going to make a ton. We're not going to get our full amount because there's so much time left. Where this is beautiful is if it kind of creeps its way up there and it kind of gets there. And then, July 1st, July 3rd, it's around 208. You're going to be just loving life up there. Okay?
You're having cocktails in the sun and then you remember you bought this thing and,
you wear that big camp shirt with the cocktail. It's going to be unbelievable. So that's what I like to do here. Now, a lot of people always ask me this: how the hell do you get out of this? When do you get out? I like to get out. Okay.
Do we call it stop, drop, and roll? I don't know. What do we do?
I could stop down and roll. You
Stop, drop, and roll.
just hold your hands out. You say, "Uncle, I give." But no, I mean, you got to get out somewhere. You have to have an exit strategy, right?
Discipline. By the way, you always speak about that.
I always speak about discipline. Got to have it. You know, if you're a beginner trader, I'd say to you that when I'd love to see you get out of 50% of your of the cost of this thing, meaning $1.40, 50% of $1.40 is 70 cents. So if this spread trickle in the time, if that's not working for you and it just nothing's happening and it gets to 70 cents, I'd probably say stop yourself out. Okay, at 50% of your cost, right?
Right.
Now, on the upside, where do I get out? I like to get out of 50% of my max profit. So when it gets to that, 860, 50% of that is 430. So if I get to $430, I'm probably going to start considering getting out. Now, if I have more than one spread on, I might start easing out of it. I might get out of 2 of 10 there, 20%, and then keep working my way out as it goes higher, knowing that I'm going to have a stop on the balance at an absolute profit, right?
Yeah.
I'm never going to lose at all in the trade once I get to that 50%.
So what he's saying is don't get greedy. Don't get greedy.
No, because it's so hard to get max profit on this. It's flipping coins because it's got to settle at 210 and it's got to do it around July expiration. That's when you're going to get max value for it. So if I can get myself to 50% of max profit well before that, the sooner the better. I'm even getting out more aggressively if I get there quicker. Okay, does that make sense?
Yeah, absolutely.
And if you have multiple trades on, you can say 50% I'm taking off something, put in the bank. I can't lose now. Put my stop up to a level where I can't lose, period, on the balance. And then I'll start working my way out of the last remainder bit at 60%, at 70% of max profit, 80%.
Is this dollar cost averaging or is that
dollar cost averaging your bank account?
That's good.
Oh man. Right. So anyway, that's a trade. That's what I'm looking at.
All right.
And there's there's other things we can do here too. There's many other things. This is the one I like. I love broken wing butterflies passionately because I've got an upside that it's not unlimited profit, but I make it no matter where it goes. I make a number no matter where it goes. So I got to the number above and beyond, and then my downside obviously is the bad side. So
and then just bookmark this episode on Friday. Paulina Likos, CNBC reporter, goes through all the fundamentals to support this trade. You're gonna love it, and the two go hand in hand, and we'll link it into in descriptions. So go check it out. Yeah.
Perfect. And then let's keep an eye on this one. Let's see how it goes here. Remember, we got 102-ish days thereabouts. Let's call it 100 days till July expiration. We'll keep having a peek at this week in and week out up until July. So remind me when we do our Wednesday stuff.
All right.
When we're doing our show to just the two of us. That
if it's a win,
let's take a look at Tesla, and I'll tell you. And if I get to my stop out point, I'm gonna stop it out. So
if it's a win, it's martinis when we reveal it, and if it's a loss, we go green juice because we'll be added in.
Like my lime green rubber band here. Yeah, we could start with, if it's a win, we're going Bloody Marys in the morning. We're going to do a couple Bill Schnauzers in the afternoon. We're going to martinis at night.
You up-leveled it.
Love it. All right. What else? I think that's it, Ma. We're running out of time. We got to go.
I know. So we could go all day.
We go all day. So give us some comments. hub.tradier.com for more great content like this. Love to know what you think about this kind of a trade. If you've ever done a broken wing butterfly, if you have questions about it, please put them in the comments. We will get to your answer. And send us some ideas on things you want us to talk about. We love talking all things options, right? This is the Brew. That's Molly. I'm Lex. See you next week.
Bye, everyone.
Bye, everyone.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be accurate actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.